Thank you, and welcome back to the Briefcase, where we talk all things business, investing, and real estate. Today, we're going to be going over vocabulary words in real estate. These will be words going from BA to BU. Let's get into it. Let's be honest, real estate has a language problem, not because it's complicated, but because nobody bothers to translate it. So today, we're fixing that, with 20 real estate terms, all starting from BA. That sounds intimidating, but it's not once you actually understand them. And by the end of this video, you won't just recognize these words. You'll know how they show up in real deals, real money, and real decisions. Let's go. Balloon payment. A balloon payment is exactly what it sounds like. Small payments, small payments, small payments, and then boom, a massive lump sum at the end of the loan. It's common in short-term financing or commercial deals. The idea is simple. Keep payments low now, deal with the big number later, which works great until later shows up. Balance sheet. This is your financial snapshot. Assets on one side, liabilities on the other. In real estate, your properties sit on the asset side. Your loans, liabilities. The difference between the two, that's your equity and your financial reality check. Bank-owned property. When a property goes through foreclosure and doesn't sell at auction, the bank takes it back. That's called an REO, real estate owned. Translation, the bank didn't want it, and now they really want to get rid of it. Basis. Your basis is what you paid for a property, plus certain adjustments. Why does this matter? Because when you sell, your profit and taxes are calculated based on this number. Get this wrong, and the IRS suddenly becomes very interested in your life. Building code. This is the rule book for how structures are built. Safety, structure, electrical, plumbing. It's all regulated. Ignore it, and best case, you redo the work. Worst case, you're explaining things to an inspector who is not in a forgiving mood. Buydown. A buydown is when you pay up front to lower your interest rate. Think of it as repaying interest to make your monthly payments cheaper. It's like buying a discount on your own loan. Buyer's agent. This is the agent who represents, you guessed it, the buyer. Their job is to protect the buyer's interests, negotiate deals, and ideally stop you from overpaying because you fell in love with the kitchen. Bylaws. Bylaws are the rules of a property association, like an HOA. They dictate what you can and can't do. Yes, including the color of your front door, and sometimes you personally. Back-end ratio. This is a lender's way of asking how much of your income is already spoken for. It measures your total debt payments, including your future mortgage, against your income. If it's too high, the bank politely declines your dreams. Bad faith. Bad faith means someone is acting dishonestly in a transaction. In real estate, that's not just unethical. It can be illegal. Deals rely on trust. Break that, and things unravel quickly. Bare trust. A bare trust is when one party holds property for another. They don't control it. They just hold the title. Think of it like holding someone's phone without knowing the password. Bargain sale. A bargain sale happens when a property sells below market value. Sometimes it's intentional, like between family members. Other times, it's just a really motivated seller. Base rent. This is the minimum rent in a lease, before extras like maintenance or utilities. In commercial real estate, this number matters more than almost everything, because everything else stacks on top of it. Blanket mortgage. One loan, multiple properties. Instead of financing each property individually, you bundle them together. Efficient? Yes. Risky? Also yes, because one default can affect everything. Boot. In a 1031 exchange, boot is anything you receive that isn't like kind property, usually cash. And unfortunately, the IRS treats it as taxable. So not all extra money is good money. Bridge loan. A bridge loan is a short-term financing that helps you bridge the gap between buying and selling. You use it when timing doesn't line up perfectly. It's fast, flexible, and usually more expensive because convenience always has a price. Broker. A broker is a licensed professional who can operate independently and oversee agents. Think of them as the quarterback of a real estate office. More responsibility, more authority, and more paperwork. Brokerage. The brokerage is the company agents work under. Every agent hangs their license somewhere, and this is where it lives. It's the structure behind every deal you see. Bulk sale. A bulk sale is when multiple properties are sold together in one transaction. Investors love this because buying in volume often means better pricing and faster scaling. Business cycle. Real estate doesn't move randomly. It follows cycles: expansion, peak, contraction, recovery. Understanding where you are in that cycle, that's the difference between buying smart and buying late. And thank you for sticking with the briefcase today. If you found any of those vocabulary words insightful or confusing, make sure to comment down below. And if you enjoyed this video, make sure to like it and subscribe. Now remember, stay smart.